How do you know what lending option is best for you? Our goal on this channel is to make sure you're using the correct leverage for the real estate project you're working on. And sometimes it gets confusing. We talked to a lot of different people. What's the difference between hard money and private money or institutional money, banks or real OPM? What is going to fit the project you have, and what's going to be the most profitable option for you and your leverage? So leverage for real estate investing comes in many forms, and you really need all forms. You need hard money, you need banks, you need private equity, and you need what we call real OPM. But let's go through what's the differences so you understand the nuances of each one, where they benefit you, where it might be better to use a different product, just going through each one piece by piece and what's important in real estate. Number one, let's look at speed. How fast can you close? How fast can you get a project under contract? When you're looking at speed, typically the fastest is going to be hard money and what we call real OPM. Real OPM is just using real people's money. That's just like your neighbors, your friends. Anybody who has some money and is willing to lend to you, that's what we call real OPM. If you could find someone who has the money to do this, you're going to find that typically this is your best option for fast, cheap, easy money. When you're looking at speed, institutionals, they do things pretty fast, 2 to 3 weeks. Sometimes they stretch out to 4. Banks, typically slower unless you already have your line of credit set up, but they could take up to 4 weeks to close. So when you're looking at speed and you need to close fast, you're looking at either hard money or real OPM. And that's really a key when you're real estate investing. Most of your deals become because of speed. And what you'll find out, we have another video that shows when speed actually costs you less to fund a hard money loan than even banks or real OPM. So another important factor in real estate lending is credit score, because it matters to a lot of investors. Credit scores requirements have actually gone up over the last few years as money tightens. I say years, I meant months. So what you're going to find out is institutions, banks really look at credit score, where hard money in real OPM, other people's money, does not really focus on credit score. Yes, we'll look at credit to make sure you're not defaulting on everything, but it's not going to be based on credit score. These two rely heavily on credit score. There's some pluses and minuses to everyone. Credit score is not a plus there, it is a plus here. Experience. Have you been in business 2 years? Have you done enough transactions? What does that look like? When you're starting out in real estate investing, you got to start somewhere. Typically, you're looking at hard money. Institutional, they want someone with 3 to 5 transactions over a 3-year period, but they will look at people with less. They just want more money in. They may require 20% into the project instead of 10%. Banks are probably the most strict. They typically want like 5 projects, and they want 2 years of history on top of that, 2 years of tax history. These are probably the toughest ones when it comes to experience. The easiest, of course, is hard money in real OPM. So next, income. Who is going to check to make sure you qualify as far as a debt ratio? Typically, the only people who are going to be banks. You know, hard money does not. They may look at your tax returns, real OPM, and even institutions. Institutions like those hedge funds, those capital funds, they're more looking at how much you have in the bank to put into the project, not really what your income has been over the last few years. Underwriting, how do they look at your whole file? What kind of criteria do they do, and is it common? Is it common wherever you go from lender to lender? Typically, hard money is just a smaller companies, maybe even private people who lend. This is their main business is lending, and it varies from company to company, from person to person. So that's sometimes a little bit hard because you're trying to figure out exactly what they like, what they don't like, what they'll do, and what they won't. The most common that we see out there for underwriting practices is institutions. So even if it goes from Civic to Finance of America, RCN, they typically have some pretty common underwriting. They want some experience, they want 10 to 20% in. They're looking for certain things as far as liquidity, how the escrow. Common here. Banks really vary. There is some common elements, but each bank is separate. Like large banks are different than small banks. You're going to have to call, you're going to have to find out who is lending and who is not lending for real estate investors. Typically, it's smaller local banks in your community that's going to be lending to investors. It really varies too. This is real people with real money. It just depends on their experience, what they understand and what they know. Since you're working with someone who is just an individual who has some money, this is typically the easiest to use throughout all real estate investing. Flexible. Who's flexible if something comes up, or maybe you need a cross lien, or maybe it's a second over a first, or it's a unique property in a rural area. Typically, institutions are not flexible. They want to be in what they call large MSAs or larger communities. Once anything says rural or it's far enough out of city limits, they're not going to really look at things. Or if it's just unique banks, especially small banks, like here in Denver, a bank will lend in their footprint, as they call it. So we're a Denver bank. They're not going to lend probably up in Fort Collins or Greeley. They're not going to lend out of their footprint. So you have to ask, you have to find out. Real OPM, they're really flexible. Like I said, it could be your mother, your brother, your sister, a friend. They are very flexible on what you need, your terms, maybe deferring some payments. Flexibility in real estate investing is very important. Pricing, so how much does this whole thing cost? If you're looking for the cheapest, it's typically banks. This is where banks, they've had a lot of limitations, but this is where they really do shine in the cost, not only the interest rate, but how much they're charging for origination and all the other fees that come along with it. Real OPM also. What you're going to look at, hard money in institutional / hedge funds, they're both priced pretty common. They're both mid to highs. Banks right now may be 5.5 and 6. Hard money in institutions maybe from 10 to 12 in this current market as far as interest rates. Points, somewhere between 2 and 3. Banks somewhere between 1 and maybe 1.5, especially in these kind of real estate transactions. Real OPM, most of those will do it for little to no point. The 3 last items that we're going to look at today, verified funds. What is that? If you go to an institution or a bank, they're going to ask you for 2 months of bank statements to prove that you have the money for the down payment, that you have the money for the rehab, for the fix-up, and maybe even money for the payments or whatever carrying costs there are. So institutions and banks are really heavy on how much money you have in your bank and where that money came from. They want to know those things. Any project you get into, you're going to need to source, show where those funds came to, and to make sure you have enough money to not only close, put the down payment, but also carry the project all the way through the finish lines. Hard money in OPM varies, but typically that's not a huge criteria with them. You could use gap funding, you could use other sources here, but not typically here. So if you're relying on gap funding, that usually knocks these 2 out. Next up is funds available. How much money do they have to put out? Do they ever run out of money? Do you ever call them and they just say, hey, we don't have enough money, or we have to wait a couple weeks? Typically when you're looking at places that have unlimited or enough money to keep everything going, it's really the institutions, it's the banks. Hard money and real OPM, they're limited to the number of investors they have or the money in their account. A lot of times you'll find that hard money and real OPM, the negative, the downside there is the money runs out. There's not always free-flowing money, especially if projects take longer. Institution and banks, these are, institutions that are usually backed by some kind of Wall Street fund. In banks, they could, borrow from the Fed whenever they want, as long as they want to keep in there. So if you're looking at funds available, how many projects you could do, if they have enough for every project you have, you're typically looking at institutions and banks. Last, we're going to go over multi-state. So if you're an investor that's doing deals in multiple states, if you're in Oklahoma and you're doing deals in Texas, or you're from Colorado and you're doing deals in Oklahoma or Texas or Florida, who is going to be able to help you in each of those states? Typically, it's the institutions. It's the larger funds. It's the larger real estate lending institutions. Hard money, a lot of them are local to their community, and that's what they're looking for, and that's where they're going to lend. Same with banks, especially small banks. We just talked about this earlier. Some of them won't even lend out of their city, let alone the state. If you're with a regional bank, some of those will lend across state lines, so you have that option there. OPM, it really depends on exactly the client you're working with. Do they have the money? But if you're really looking for someone that's going to grow with you and go from state to state, you're really looking at institutions. Like I said, the Civics, the Finance of Americas, those private lenders, those hard money lenders, because that's what they call themselves too, that have the funds and have the offices in each state. So let's wrap this up and let's just go through the benefits of each. Because like I said, if you're a real estate investor, you need hard money. You need some institutional money. You need banks, and you really need real OPM. Where do they each fit? Typically in hard money, these are deals that need speed. Sometimes they could close in 2 to 3 days. Speed works for both hard money and real OPM. And when I talk about speed, I'm talking about stuff that typically needs to close in a couple weeks. They're not relying on appraisals. They're not relying on other things that could hold you up. Income. So if you do not have the income, if you do not have the 2 years experience, you need to start in the hard money institutional and real OPM. Banks is a place you do not go. Flexible. If you're looking for flexibility in what the lenders can do, what they could offer, different projects, you're looking at hard money. Credit score. If you don't have that credit score that some of the lenders, the banks and institutions, you're going to look at hard money. And if you lack the experience, if you don't have the 2 years, you don't have the 3 projects, this is where hard money fits. It does not fit for pure pricing, multi-state. The institutions, the private equity firms, all of those people who lend to real estate investors, they have typically common underwriting. So you know what's going to happen from deal to deal and from lender to lender. They're very common. They don't require income docs. They do require funds for closing and stuff, but they're not going to look at your 2 years of business tax returns. So that's a benefit. Funds available in multiple states. They will always have funds available as long as they want to lend. And they can lend in multiple states. Not all of them will lend in every state, but most of them lend in 30 to 40 different states. So if you find an institutional company that you want to work with, they're going to have the funds and they're going to be in multiple states. Banks, the best reason to go to banks is pricing. We're in real estate investing to make money, and if you have the deals that could take some time, you're flexible, maybe you even have some cash to keep the project going while you're waiting for escrows coming back from banks, that's where banks come in. Pricing is what they hit. That is their biggest benefit. Real LPM, like I talked about, finding that source that is a private person who wants money, that they don't want to earn 1 or 2%, they want to earn better, and you could work with them and you could secure them properly. That's where speed, pricing, everything comes into play. Maybe not being able to go from state to state and probably running out of funds sooner or later. But you may find someone there who will do a 3-month loan or a 30-year loan. Real OPM is a great place to be. We have some great information on it. Everyone understands the differences between the money sources. Like I said, you need them all. You just need them all in the right places to make sure you have the right leverage. If you have any questions about what's the best lending option for you, we have a weekly call-in every Thursday. You could check below. We'll have a link. If you have a deal, just email us. We'd be glad to talk to you. Or just a general question. Email us, reach out to us. We have a couple other videos that goes over what hard money is good for and what it's not good for. So please check out the channel, like this video, and we'll see you real soon.